Yeah, so agriculture has a lot of linkages in this region, even if it's not farming directly, that plays into the economy because manufacturing is tied to agriculture and transportation is tied to agriculture. And there's a number of communities that would be tied very closely to ag and banking. So the indirect effects of what happens in agriculture do spill over into the rest of the economy. In April, I would say, again, at the peak of the crisis, we worried a lot about sort of what the health of the industry might be. This was a time when ethanol plants were closing quite dramatically. Meat packing plants were closing because of COVID disruptions. Trade was a real question. The last couple of months, we've seen some of those things improve a little bit, and there have been some government support programs that I think have allowed some amount of relief to be able to offset the challenges. To your point, though, about low commodity prices, this is an environment that ag has found itself in really for the past 5 years or so, or more in some places. So while I think that there may be support that allows producers and the industry at large to get through 2020, I think going into 2021, those large supplies are likely to continue to weigh on prices and profits into next year, which is almost certain to affect then how producers will need to make decisions and how the industry positions itself going forward.
We've also had government programs that have allowed stimulus money to come in the form of MFP 1 and 2. However, I guess this is more of a political question, but not a political question, but you're going to take it that way anyway. Given the presidential election, I mean, some of that has to play into how do you factor looking forward the politics, just like it would be the weather, two things unpredictable that we know influence an economy, but you can't really quantify on what it does for the economy.
Yeah, so I think that when we try to get our assessment of what the markets might look like, we would certainly want to look at those fundamentals of supply and demand and take into account what's happening globally and trade flows and things that we know on the basis of data, but then recognize where there might be sources of uncertainty. And we may describe those as potential factors that are upside risks or things that would also be risks to the downside. So I think that we try to describe those that way, but it would be very difficult to try to forecast on the basis of potential policy, or even for a lender, for that matter, to make a decision on financing on the basis of what programs might look like in 2021. And so I think where we've found ourselves at the beginning of each of the past 3 years, in advance of some of the programs that you referenced, is to say that the markets look like they could be a challenge again, and there could be more financial stress. But in each of those years, there has been some sort of program then that has mitigated or offset some of the weaknesses that we probably would have observed without them. So that's sort of how we go about our discussion of the conditions, but recognizing that there's going to be risks to either side.
Never a dull moment for you, is it?
And certainly not in 2020.
All right, what's the rest of the day like? What are you going to read? What's something that folks should be looking at to kind of help better understand what you're looking at?
Yeah, we obviously follow markets on a regular basis, but we're also paying attention to things that are broader than that. Pricing, not just from commodities, but even on the retail side of things, and tracking what's happening in terms of consumer behavior. This massive shift to consumption at grocery stores and supermarkets has big implications for what happens on the farms and producers from a raw material perspective. So, we try to pay attention to all of those data points. We try to interact with as many people as we can. Like I said, we're coming off of a couple of weeks of a policy meeting, and now sort of starts the time leading into September where we are reaching out and formulating our questions that we want to understand going into our next FOMC meeting and policy cycle. So, even having these sorts of conversations and taking questions from people, those are things that we will do quite regularly so that we have a better sense of how to think about the pulse of the industry in the region.
I always like a good question. What was one of the questions from last month?
So we've been trying to understand the impact of the pandemic on supply chains and supply chain disruptions. And so we will ask whether it's our contacts in the region or a specific industry, to what extent they may be experiencing challenges in the supply chain and how that might be factoring into any sorts of pricing pressures. So is it difficult getting materials of a certain kind, for example, if you're a manufacturer, or, in terms of commercial real estate, what does that market look like? And are there disruptions there that we should be thinking about, and pricing pressures? So we've asked a lot recently about the health and strength of our supply chains. And it goes back to my comment about the shift in consumption to supermarkets as opposed to restaurants. And that holds a lot of, I think, importance for what happens in the broader economy in terms of how those supply chains might be holding up, both here and globally, because we do focus also on what supply chains look like across borders, here in China and other places.